With stocks up double digits so far this year and the S&P closing in on an all-time high, the thing that could derail the run right now is earnings. And don't look now, but here they come. Bob Pisani tells us what to look for.
Earnings season officially kicks off on Friday, and right now, first quarter earnings are expected to go negative, down 2.5% from last year. Now, this will be the first earnings decline we've seen since the second quarter of 2016. But the S&P 500 is still less than 2% from its historic high. Wait a minute, stocks are rising even with lower earnings forecasting? What's going on? Well, investors are focused on the future. That's what's happening. They're not focused on the past. Remember, the stock market is a discounting mechanism for a future stream of earnings. And right now, the bull narrative is winning out on Wall Street. What's that? Well, the bull narrative is that China and Europe are both bottoming, and that should lend some stability to the global markets. Now, the markets have gone from pricing in negative growth in the first half to rapidly reaccelerating growth in the fourth quarter and in the beginning of 2020. A lot of industries that were under pressure in the fourth quarter, so for example, think semiconductors, they've snapped back big time this year, all on this bottoming growth story. So KLA-Tencor, for example, and Samsung, a major chip supplier, said in January that demand would recover in the second half of the year, and essentially Wall Street has bought into that story, and that's why the market keeps going up. And by the way, flat or declining earnings don't necessarily mean that the stock market is in trouble. First of all, there's a very good chance earnings for the first quarter will in fact turn positive and won't be negative. Second, declining earnings do not necessarily correlate with a decline in the stock market. There have been many times in the past where earnings have been flat or declined, and even when the market declined, it quickly bounced back because there was no recession that followed. And that's the key. If you believe that there will be a recession in 2020, then earnings will certainly decline and go negative, along with the stock market. But it's not all clear that that's going to happen. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.